Mic check, mic check, mic check, mic check, mic check. I think we're live. I think we are live. Video, let's go. All right. So I think we're live. If you are live with me and you can hear me and you are around, please do me the biggest favor and just give me a mic check clarification before I start. I know a lot of people just always assume their sound is clear and they don't do this, but I would very much prefer to be on the safer side of things. Good morning, everybody, and welcome to market opening number 8, London session. The date today, the 2nd of March. We are in day something big, day 5, day 6, probably day 7 or 8 or day 9 or 10, I'm sure, of the Russian-Ukrainian war. I'll be been trying to cover this as much as I can, trying to give as much guidance as I can. Fantastic. Thank you guys for the audio check. And it's been an interesting time. I've really spent more time learning than anything else. And so today, what we're going to do, what we always do during these market openings, we're just going to look at short-term relay plays. Most of them do last for about 3 to 4 to 5 days. The Euro USD trade that I took did about 4 days before I got out. EURJPY short-term trade, that 9 a.m. session has been running ever since. Everybody decides where their take profit is, right? It helps a lot if you are a student of the academy, but if you're not a student, it's also perfectly fine. You just learn as you go. But if you are a student, then you know your supplies and demands already, is what I mean by saying it helps a lot. Right. So we are in a big day today. Just so everyone is very clear, at about 10, I have to get out of the house and drive straight to the office for another meeting. So today's morning live will be like 50 minutes, give or take. At 10 to 10, I will have to stop. I do apologize for any inconvenience. But today is Wednesday, so please don't forget today at 3:15, I've tried my level best to have my afternoon cleared for this. It's a win-lose type of situation. I want to make it a point in 2022, especially during the war. Personally, I will not be trading live. I will not be trading news events at the impact of the news. So I won't be trying to catch 3 p.m. volatility. I've always found that quite weird, why retail traders are obsessed with that, obsessed with trading spikes, right? You can actually watch the markets at 3:15. You can watch the markets remove or take off supplies on the smaller time frames. And naturally, all things being equal, 80% of the times, markets return to those areas of value, right? So if you're free between 3:15 and say 6 p.m., which is like a 3-hour window, you can watch the news, you can watch its impact, you can see the direction, and then act on it. Markets will come back, right? And it's kind of like part of the stuff we've been doing in these sessions. Like we are marking these strong areas of value, right? So at about 3:15 today, if I'm busy, I'm busy. But if I'm not busy, I might jump on live if that's useful for people to see and just make commentary and then mark up some zones, right? But we're getting the ADP, non-farm payroll. Last time they were minus 300,000. Today they're hoping for 378K. I told you there's a lot of tricks and bonds this week. There is the average earnings, which is predicted to go a little bit down compared to the previous month, even though we were told we're in a wage spiral. But in a wage spiral, I expect this to go up. But the reason why financial analysts are pushing it down is because overall, most financial analysts are looking at a decline in jobs being created. So NFP was 467. They're thinking now we're going to lose 60% or 60,000 of those jobs. And so maybe the wage average hourly earnings per month on month will also go down. But interestingly enough, the ADP target is much less or much smaller than the NFP target, which means if ADP is correct, it automatically makes NFP negative. I don't know if anyone is thinking through the stuff like that, right? And then unemployment as well, because of just the nature of the world, you want to see this number go down. So you want to see a 3.9%, you want to see a 3.8%, you want to see a 3.7%, something like that. This year is going to be a bit tricky in terms of covering NFP because by its very nature, it's on Fridays. And last year, my therapy sessions were on Thursdays. The year before that were on Wednesdays. And this year, my therapist and I meet 3 p.m. on Friday. So normally Fridays I play golf and go to therapy, then call it a day. So I'll be giving you my predictions on NFP the night before, right? But won't be able to just sit through them with you this year. It's just unfortunately important for me to kind of like operate that way, right? So usual drill, ladies and gentlemen, usual drill, right? It's not surprising that, you know, nothing is good in the world. Ukraine war is likely heading into more destructive and deeply phase, right? So to make sure you guys I'm sharing the right screen. Yes, I am. Right. So that's what's going on, right? So, you know, people are, you know, yesterday we saw that there was a big convoy approaching. I haven't even seen a headline. Maybe I could be wrong, but I literally haven't seen a headline in a long time about what exactly happened in those peace talks. Does anyone know? Did those negotiation talks, peace talks, whatever type of talks, what did they yield, right? Because straight after that, we saw Putin send in a lot of people, right? Putin's popularity soared, went up. After Russia invaded Crimea, this time it's different, right? Right. So his own people are not happy about this. War can never be the answer. All right. Some oligarchs are speaking out now, but that's because United States has been confiscating most of these very rich Russian people's assets. I'm talking yachts. I'm talking, you know, clearing their bank accounts. I'm talking trying to seize as much of their assets as possible as part of the sanctions. Right, Ukraine raises $270 million from sale of war bonds to fund army as Russian invasion continues. Right, oil is going up, guys. The new oil target is 120. I never miss with this target. So if those of you want to go long, go long at the right place though. Right, but the target is now 120. It's a long-term swing trade. I expect first a retracement to 89, 90 something dollars per barrel, and then we go very long, right? So that's where I'm waiting. You know, meta, blah blah blah. Right. So this is all point, right? So basically nothing good. In the pre-market, all right, we are down. Dow's down, SP 500 is down, Nasdaq is down. I should talk about the treasury stuff. Something interesting is happening here. But you know, basically we're back to the usual stuff. Last night, you know, in the AM markets, Asian markets bled through. Okay, Shanghai, Nike 225, Hong Kong, pretty much stuff just bled through, right? It's just not a good time. I always say this week, to me, by the way, looks like we might get short squeezes, but maybe the sentiment will remain bearish. Short squeezes are those of you like me who've been continuously advocating for a push down on the Nasdaq, right? All of a sudden, the markets get too strong. Job report, ADP and NFP, and Nasdaq explodes to the upside, taking out any hedge funds that are stuck in long-term sell positions, right? It's a perfect setup, is what I'm saying. I'm not saying it's going to happen, but a perfect setup for a short squeeze exists. FTSE 100 also down, right? And then obviously we know oil did very well, is doing well. Energy sector, gas, Brent oil, natural gas. It's just, look, we're already on 19, right? So 120. The 120 I'm talking about is literally not like a wild dream. Gold, you know, looking down, but it's above 1940, right? I don't know if Pongi is still in that gold trade or whoever is in that gold trade, right? Because gold is doing well. There's a question in the private Telegram group about gold and silver. I apologize, guys. I will attend to the private Telegram group today in the afternoon. I promise you, right? So I'll come back to that stuff. I am falling behind with the messages there. I just saw it pop up. I don't know what it's about, right? But look at platinum and palladium, copper. All these things are down in the day, like in the last 24 hours. But these things are fairly doing well right now. Fairly doing well, right? So it's gold slips as dollar firms, right? So yesterday I did post, you know, a picture of DXY. So that's why there would be a red on gold. But remember, red on gold over a 24-hour comparison. Let me just give you this look here. All right, so this is gold on the 1 hour time frame. Okay, the last time we spoke about gold, some people were buying somewhere down here, you know, and I told you guys break even. And now, you know, on the 1 hour time frame, you know, markets are really creating some beautiful, strong levels. So if you're still in this trade, I would move my stop loss to just underneath here. If you're still in this trade, I'll move my stop loss to 1987 with your target right in front of you. Your target is literally right in front of you. Man, this could have been, you know, a reaction to your target, give or take. So maybe some of you are out. So let me just redraw that carefully, just so we make sure we maintain. And the reason why, you know, I'm telling people to be kind of like not in a rush to take profits, but just be mindful of a clean 1:3 is because of how markets move. Yeah, okay, cool. So that would have been a fair take profit on gold. If you're already out, if you're not out, then you're looking at a retouch there, right? Just make sure you get there, but also be prepared now for a little bit of a push down. The reason for that is if you're in our public Telegram group, DXY, phenomenally well, man. This is just what we expect out of the dollar, you know, as it's preparing for a big week. So here's the logic, because NFP is, you know, a few days from now, ADP is today. Wouldn't it be interesting if we take out a strong daily supply, right, during or before a big news event, and then that news event pushes price down? Well, Leroy, what would that mean? Well, for that to happen, ADP would be negative. For that to happen, right, for that to happen, ADP would have to be negative. So let's have a look at these numbers. So instead of getting 378, we get 300. Like, remember last time they were on 301 or something, right? We get 300,000, so we missed the mark, right? So that would be an incentive to push price down for a perfect upward rally. But what would cause this perfect upward rally? Well, potentially positive NFP. Surprise, surprise. You thought we were going to get 60,000 less jobs. Well, we actually got 500,000 jobs. And I don't know, I'm just throwing numbers in the air, but I'm just trying to make sense what structure is telling me. So this is option one on the table, which obviously I'm going to brief my team about when I get to the office, but they know, man, they've been with me long enough. Last year, we had a hit record of all NFPs, you know, traded accurately, which was, you know, quite incredible, right? So that's one particular potential option. Option number two is quite simple, right? ADP might actually be positive off the bat. Dollar has already priced that in off the bat. And so this upward rally might just continue. Rip out a supply, have a short retracement in somewhere here, and then keep going up in preparation for NFP, in preparation for the increase of the interest rate, right? All this stuff that we always talk about on the channel. Granted, for me, option one that I gave you is a better option, because then it allows more people to buy low, right? So option one is take out a supply, which is to clear the way, but then get a negative report, which will push price down, right? But either way, be prepared. You don't have to react to the news when it comes out. All you have to do is to wait for the markets. Look at this. Russia declared nuclear over the weekend. Markets opened on a gap, and I told you guys about gaps on Monday, and I think on Tuesday I said gaps need to be filled. A market will rush to fill the gap. So you find the demand that created a gap, or the supply that created a gap, and there you are. You're all in this money with me. If you're following what I'm saying, it's a clean trade setup, right? So I'm saying to you, instead of being obsessed about being right or wrong, about guessing figures and news events, but you get there in your financial journey after you see this market. Just be interested in mastering the basics of supply and demand to a point where you know what to expect, that when markets remove an area of value and open the door to heaven, you can expect price to come back down. And then now you're just waiting for the catalyst that's going to cause that, right? So DXY strong, gold is now starting to slow back. But, you know, once again, just, you know, tomato, gold is also, you know, faring its own. It's really doing well, right? But gold is about to hit a daily supply. So what does this mean, right? The daily supply simply means, well, it might be time. It's not even a nice daily supply. I lie. It's not it looked like a daily supply on H1, but is it really a daily supply? I mean, remember this long week, what did I tell you? Market efficiency. So you guys are intraday traders or learning to become one. So these small things are important. Swing traders, we don't care. We don't care, right? But for short-term traders, market efficiencies, right? You gotta feel all this. You gotta meet it, right? So markets are approaching, I guess, maybe an H4 supply. I don't know why I have that zone marked, right? So yeah, markets are definitely approaching an H4 supply. So what could an H4 supply potentially do? Well, it could push price down. Wait a minute. If gold goes down because there's an H4 supply and dollar keeps going up, what does it mean? Well, we could get a positive ADP report, right? So smart money is split, number one, but number two, They are trying their best to maximize on fear, panic, uncertainty, and a lot of retail trader liquidity, right? And I think, you know, I've done a good enough introduction on module 3. Like, all this stuff is just surface level. You guys need to learn about wick off, change of character, breakdown of market structure, how to mirror on the 1 minute time frame after a clean multiple time frame analysis. And so, you know, all these small trades that I'm taking are aiding me into quickly releasing module 3, because I'm counting them as part of the 1,000 trades I have to take, right? And I was surprised that, you know, we're actually getting very close to that target. So we will meet the March deadline, right? So let's look at some pairs, guys, before I disappear. Pairs that are integrally linked to what's going to happen, or what I think is going to happen today. Or we'll see how far we get, because all these pairs are important. So we normally start with Euro Pound. Euro Pound on the 1 hour time frame. This big block of yellow is starting to confuse and annoy me, right? So I'm going to remove it because we don't need this big block. Remember, we had a big gap up here on Monday, and then markets have just done this since Monday opening time. Markets open to the downside. Markets got up way here. What do gaps do? Gaps need to be filled. You don't know when, you don't know how, but gaps need to be filled. So you need to find the trend that's going to fill the gap. Oh, look, uptrend was created yesterday, all right? And so markets are slowly but surely making their way. They've filled most of the gap, but not all, not the entire gap. The entire gap is this big, right? So that's the entire gap. And you can see that yesterday I drew this white line here to show you how far, but this is now how far they've really gone in filling the gap. There's still a little bit more left. And when price gets to this little bit, what is this? This is massive sell pressure. All of this here is massive sell pressure, right? So I will personally, depending on the sentiment of the day, you know, or pending order, or you know, risk smartly. You cannot, like, in front of your laptop like me, and you might have to just kind of, like, you know, take a risk. This is a good place to almost try and shoot this market. Euro Pound somewhere up here short term, and we're targeting, you know, so the activities there. You know, info, I just want to see how big this thing is. This is about a 12 pip area of value. Intraday traders, after you do my you know, module 3, you will become extremely sharper, right? Risking only absolutely what you need to, unlike swing traders where we just swallow because we fundamentally trust our ability to hold long term, right? So really, you could be looking at an area of value that looks like this. And that's the 15-minute time frame. Naturally, as me, because I've seen in my long years of trading how very competitive and brutal smart money can be, my area of competition is always wide enough. I mean, if most of my trades on swings are like 100 pips, what's 12 pips to me, right? So I would literally hold that. But for those of you who are looking for a higher risk to reward ratio, that is it. Or in the event we're wrong and risk switches up upon us, right, then you're risking far less, right? But that's what we have right here on the 15 minutes time frame. Just for, you know, kicks and giggles, let's go to the 5 minutes and let's look at some distribution of price. Right, so you've got some psychology, you've got buyer exhaustion, right, number 1, and then you've got some cool stuff here. Break of market. I shouldn't even be doing this today, since today is the day where I don't have a lot of time, but let's do it quickly. Break of market structure, price rallies up to buyer's exhaustion, right, where dumb money entered, right? You remember I teach a lot about this in module 2. This is what it looks like. And then you're looking for an OT, right? So literally some type of strong turning point within price that finally agrees that mitigation of all these buyers is done, right? So something like that, and then finally an upward push here. Now, this is important. This big red candle is the one that's most important, but we need to see it demonstrate power by breaking market structure. So we've got some type of structure here that's broken. Please ignore this white line. I'm going to make it red. That's just my entry place, right? No, not mine, but for those of you who really wanted to be super, super, super tight with your entries, right? That red line is there, but the white line is just showing strong structural removal. Let's go to a Kinihashi candlesticks real quick. I won't be able to go through every single chart with such detail, right? Otherwise, we're just going to do one chart together. You see there where we drew the white line, you can see those wicks rejection. Markets breaks that entire area of value type of entire structure. There is this that's also broken. So very good, strong supply. We are hoping it is the last supply that price needs to form in that particular area, breaks through all of that, breaks through a previous broken point, and then markets start to play around, etc., 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 and head to the downside, right? The downside is also quite interesting. Price is coming from a demand, so just remember that, right? So I personally would want to take this, right? So on the 1 hour time frame, even though there's a little 15-minute structure break, we have a removal of an area right there as well on the 1 hour time frame, which is quite significant for us, right? For where we want to be. You've got some demand being completely ignored as price seeks to go lower, right? So I would try it somewhere up there for Euro Pound. It's worth well the risk, right? It's technically worth well the risk. Granted, sentiment, America could go, we're tired of playing mind games, we're gonna nuke Russia, and it's like, oh no, but war is bad. But if you notice, these markets have been taking strong stances against Russia as positive sentiment, right? If you look at that market capitulation that I spoke about on Monday or Sunday, I can't remember when, where I was saying after you shake off all the sellers and all the panickers and all the small hedge funds and all the small banks and retail traders, at some point markets, they have no choice but to give up, right? And they'll use anything really to signal good news. So if Russia, if there's a stronger stance, right, kick Russia off the internet. Look at this, right? Small things like this could be like sentiment, like yeah, we're gonna punish them. Yesterday there was a campaign for crypto exchanges to remove Russian citizens off crypto, right? Essentially, it's like, well, but Russian government is attacking Ukraine. Russian citizens are suffering as well, right? But in any case, if you look at the exchange, Russian rubles, we know it's from Russia because a lot of people were exchanging Russian rubles or rubies, I think it's rubles, for crypto, right? So crypto is doing wild, like bananas, bro, like really bananas, like everything, yes, it's a very choppy market. And it's only choppy because it's inside a strong psychological supply, right? This is like the last line of defense, to be honest with you, for bears, like for this bear cycle that we're in a long-term bullish market, right? If this defense breaks, then the meeting of these trend lines will almost become a waste of particular time, right? So the supply to supply. But if price trades above this area here, 48, then you're gonna see them ringing the bells, right? We're back to 100K, 50K, 60K, etc., etc. I mean, there'll be multiple bust ups along the way. But more importantly, if markets break this above this one here, then I have to wait my turn. I have to wait for the 30,000, 20,000. I still believe we'll get there. I don't know what will take us there. I don't know when we'll go there, but I have to wait my turn. That's why, I'm just gonna dollar cost average. I did tell you guys I'm 70% cash. By the way, it's you're literally running out of time. There's never a bad time to join the Wealthy in 3 Years program, but I want you to know markets pricing changes, right? So there was an optimum time to buy into things. That time is slowly but surely slipping away. So you'd want to join with the March people. I've seen a couple of you guys who have now entered, but this is where we are with Bitcoin, right? If something happens, if, for example, the exchanges, in my humble opinion, had agreed to keep Russian people off, we would have known that, it's crazy. Crypto is nowhere decentralized as we thought. It's nowhere for the people as we thought. And that would have been potentially an incredible, bear signal, right? So, or Binance, Coinbase, one of the other ones, they all said, no, they won't be doing that, right? They're not going to get involved in kicking people off. Right, so I digress, right? So Euro Pound, you guys know what's cooking. Geez, I talk a lot. Right, Euro Pound, you guys know what's cooking. We are, well, you know what at least what I'm willing to do. Let me put it that way. I'm willing to wait a little bit somewhere up here, fundamentally because it is, and today is going to be a telling day for the markets, right? Dollar is strong, but there's ADP, but also Euro is strong, but there's ADP, right? This crazy strength, right? Markets are opening from the Asian markets through a PCP on the 1 hour. And fulfilling that stuff, right? So be careful. You might get here during New York Times. I don't know. Definitely by Asian markets, at midnight we'll be somewhere here, and then we'll have to see if we're going to mitigate this area, right? This is my 15-minute sell-off. This is what it looks like on the 1 hour. Let's try and catch another trade before I disappear. Euro USD. I hope these morning things are helpful. Right, Euro USD, right, broke through the demand that we spoke about yesterday. I told you guys, I told you, only cowboys, right? I show you that the gray area has been broken by the daily long time ago. So all these bandages are not safe. And there's price trading, you know, to the downside on the H4 time frame. You can see we're in a bear structure, you know, slightly bearish market, right? Price has been coming down. We know that Euro would love to have a swing trade all the way up there, and I'm still waiting for it. But in the meantime, right, markets just can't help but get overwhelmed by the negative sentiment. It's almost like, you know, markets are starting to lose, you know, a sense of meaning in terms of positive meaning, right? Remember all these risky runs, like, yay, sanctions, yay, America is getting involved, yay, Germany is gonna remove them from the SWIFT. The overall sentiment is always bad, and this is, you can see that dominating long term, right? So that's kind of like the trader I am. I like to trade really thoroughly in line with the trend. Right now, if I look clearly now, I'm going to remove these zones because they're not only annoying, but they're now a waste of our time. This has also been broken as of yesterday. We spoke about all of this stuff yesterday. I said, Cowboys, you might try for a buy, but most of us, we were not. We're waiting for sales, right? So there's the big sale that we're waiting for now on these intraday time frames, right? And it's starting to look like, you know, when will price get there? Well, big reports this week, you'll be thoroughly surprised. You'd be very, very much surprised how fast price can move. But in any event, let's have a look at a couple of cool things. So I would look at our old sell setup and look at the new swing lows and go, there's a 50-60% golden ratio discount somewhere here. That's what I would do. And then I would look at, you know, the actual low lows like this, but also look at the most recent swing high, which would require me to pull my Fibonacci like that. And then I'll be like, right, somewhere here on this 50% mark, there also some type of selling. This, by the way, being the order block that took out a previous demand, right? So that's a big deal. Then I'll take some simple lines and just mark out some simple, you know, breakdown of structure, and then make sense of it on the smaller time frames and see if there's anything worth taking a risk for. Bearing in mind that the best sales in life are the highest sales. So we don't want to sacrifice our capital, you know, for something down here when we know there's something beautiful up there. But we know that if the sentiment continues to be so bad, right, there's really not much worth fighting for in the markets to even go back up there, right? That's why price is struggling to come up to our swing areas, right? If I do a Kinahashi, I still, I mean, yes, this might be far, but this isn't, right? This is well worth it. And if you're gonna wait for this, then you might as well split your risk and also take that, right? I wouldn't take the order block that's there. I did see that Fibonacci confirmed it, but I'm not yet a thorough believer. But let's see. Let's draw some zones on Euro USD. We're editing, doing the work that we started yesterday on the zone. Let's see if there's some type of compromise, right? I'm gonna bring back normal candlesticks. It's a quick session, guys. I have to kind of like, you know, sharpen the speed because I'll see something exciting and get distracted by explaining it, and then before you know it, it's 10 to 9 and I've done one chart, right? So you'll forgive my speed. All right, so this is what it looks like on Euro USD. I mean, it's a clean imbalance, but it's not the type of order blocks that I'd like to trade. So I like my bearish engulfing patterns, etc. Number one. Number two, you know, this is not a bearish engulfing pattern. It didn't give us a strong imbalance. So one would ignore it, okay, and say, well, because of that, we're just going to ignore the left and then we're going to start here. Still not really a bearish engulfing pattern, but at least you have some sense of strong imbalance, some selling. One would assume this is smart money pushing price all the way down. All right, and if that's the case, then we can negotiate for an area to take a risk on. If that is the case, we can negotiate. So now let's draw a fib one more time from this area. Just want to see quickly. Yeah, okay, so not much has changed, right? So now from there, drop to 15 minutes. I'm gonna have to be careful and look to the left as well, right? This is crazy. I want to mitigate this no matter what, right? But on the 15 minutes time frame, you also once again have just a normal turning point with an imbalance, right? Where price came back and reacted to, right? Somewhere here. All of this is a reaction to the above. So please don't forget that, which means this is no longer fresh. Please don't forget that. But we noticed that as price was reacting to the above, failing to, really give us a strong bearish engulfment, it still did some type of damage, right, to price. So we're looking at this type of structure being completely removed over there by that supply. This structure also being removed there by the supply. Remember, if structure is made by smart money, only smart money can remove smart money structures. And every time they remove structures, we get to learn about their bias, right? So all these breaks of structures can be traced to the final move here. All right, so this could be the next place to kind of like take a risk, right? So if I was to say this one will wait for, right, and it's a high risk, guys. Remember, as long as there's a higher supply, smart money will always come to that, right? So you must be very, very mindful of that. Then I'm going to take it one step further and go to 5 minutes real quick just to see something. All right, so I want to see how this area was mitigated, right? What was the distribution? Do I see buyers exhaustion into the area, etc., etc.? For example, if you look left to that order block that we did say was tested, we can see that price can get a little bit tight. I mean, I don't want to have too many white lines on the chart. I just want to draw it here and show it to you. All right, there you go. You see that there? Markets made contact there. That's why I say, like, if you really master my module 3, your ability to be mad accurate, which completely reduces the risk because your small areas of value are tiny and small, will be beautiful, right? So our fresh touch into, it's no longer our point of interest, but definitely supply number 1 with a good imbalance, clean into the 5 minute supply, which led to a 50-minute supply, which led to a 1 hour supply, which led to price dropping, throughout the, from the 28th of February and then, to the onslaught of where we are today, the 2nd of March, right? So that's quite clean, right? So markets mitigate there, and for me, I see buyers exhaustion, and then all of a sudden, markets come back into this area, but also take out, no, I don't want this red line now. Also take out another type of structure. I'm just showing them all to you, all of them, right? So you want to see this kind of stuff, right? And then now the question is, well, how far can price come back up now with all this stuff going on? Won't this supply stop it? Probably could, right? When I look into this area, I want to tighten it a little bit, right? So clean imbalance, a new low that's taken out, and it's taken out by this. So this is really the supply in charge now. Bearish engulfing pattern, which is really what I like looking for, right? Markets come back to retest it, and it's strong enough to take price out. Right now, what I hate about this area is the simple fact that, class effect, price has really overextended into it. Hasn't broken it, but really overextended into it to a point of worry, right? So I'm very much worried about that particular zone. In fact, if price can hold it. But I also acknowledge that during the class effect was the takeoff phase, right? So we might even get at least one clean touch. But yeah, it'll be dealer's choice, trader's choice in terms of risk, right? So I'm gonna start climbing back out of this hole 15 minutes just to see what that would look like and to see if it matches with any order blocks. So you see that gray area that I just drew is literally how I taught you to draw your areas of value in module 1 of the course, right? So yeah, so I'm gonna take a risk here. And it's not going to be the greatest risk. It's one of those risks where you almost want to accept loss immediately because deep down inside the area of value has been tagged a few times, but how big is it, right? The whole point of this is like 10 pips, right? So if you're used to what we're used to, then as a swing trader, this is nothing. And this whole area, which will probably be clear on the 1 hour, is only about 23 pips, right? And then as a swing trader, I could enter here and hold this, even the original area, just to protect my stop loss of 57 pips. As long as I get a 1:3, I'm good. As long as I'm holding 57 pips and I'm gonna make at least 180 pips to the downside sell, hold that sell all the way to a weekly demand or something, I am golden, right? Yeah, I'm just letting you know. how that could, possibly work. Right, and then here now is this situation there where we are on the 15 minutes time frame. It looks something like that, right? So there's a lot going on Euro USD, and obviously a lot of it hinges on today's report. The London session is showing rejections right there at 9 a.m. candlestick, and markets might want to start climbing a little bit up. I don't see from where, what's the source of this climb. I can't see an immediate 1 hour H4 type of demand. It might have to be a historical level to the left. I don't know if you guys heard my phone ring. So that's my what are they called? I guess personal assistants, although I hate that term, kindly reminding me to leave the house. I'm still like on COVID mode. I literally, prefer to have meetings online from the house, but there are some people who literally travel. Anyways, long story short, we've got about 10 minutes left together. Right, so that's Euro USD. There is this, I'm not interested, just so you know, it's there. I see it, not interested. I will not be taking it. It looks like a trap. I want to see price climb. I want to see commitment. If price doesn't climb because of sentiment, because of ADP, then I guarantee you this risky area will be good enough for markets to keep dropping. All right, I guarantee you this risky area will be good enough for price to keep dropping. But it's just the start of the session, guys. I mean, look at this. This is 6 a.m. Why is this wrong? And this is 9 a.m. right? So let's delete this. I just want to show you, remember, because we look at this stuff every 24 hours. Do not forget that markets really move. So between this red line and this red line is 1 day, right? From 9 to 9, like it's a 24-hour period. Now look at it carefully. Markets can start very low. So this one started somewhere here in a weird way. So in 1 day, Euro USD moved downwards 53 pips and then moved to the upside on the exact same day from 1 p.m. all the way to, about midnight, 105 pips. And then that midnight to the next, 9 a.m., right? It's a lot. To the downside, 123 pips to about 7 a.m. You get my point, right? Markets can really rally into the next day. So looking at price right now, it's terrible to quickly react on it. Let's see how markets price in today's event. If euro keeps weakening, it means dollar is strong, but it means markets are expecting a positive ADP. All right, but if euro all of a sudden starts to rise and dollar starts to weaken, dollar has finished its job by that supply, taken the supply out, and we're now preparing for a downward swing, right? So remember that too, because that's absolutely important. But also, it might mean that then be prepared for a shocking ADP report, right? Nothing is random in these markets. So you really want to kind of like have your thinking cap on. And the best way to do that is to allow smart money to move first. I don't know when it became cool to speculate and guess all the time what smart money is doing. Allow them to move first. Let them show their hand, and then we wait, right? So that's Euro USD done. Let's look at an interesting one. EURGBP. I say interesting because when I went to sleep, this was the last thing I looked at yesterday, so I already know that my chart is marked up perfectly. Right, so EURJPY, we have this situation. You will know that we've been talking about a long-term sell trend on this in the war room. Then I marked up this last 9 a.m. session. I told you that this was going to be a good place for price to react, right? And price did react twice to this, and that held, right? So then when markets held, markets broke structure to the upside, which was a little bit worrying. This is on the 1 hour time frame, a little bit worrying, right? So it's all the liquidity rate, right? We will talk all these things, right? Like smart money knows there's some liquidity. It took some liquidity instead of turning and then dropped, right? Use that liquidity against retail traders and then continued forming order blocks. Now, this whole yellow cluster could be a zone in the 1 hour, 15 minutes, 30 minutes, 5 minutes. I mean, I was just being a clown. But the reason why I focused on this cluster on EURJPY is because I took this high and that low, drew a fib, and I noticed that my golden ratio is in here. So just so we're all clear, because I know my chart is a little mess. This is my golden ratio here. You see this yellow line there? There, right there. Right, and then I started to see in between golden ratio could be an unmitigated area of value. And I did a long investigation trying to find the best place to wait. The assumption is EURJPY will keep falling, all right? it might need a little bit of assistance. Number one. Number two, this order block in here has been already retested. This one here has been retested exactly. So all of them have been somewhat retested. They're not exactly fresh. So this gray box here was me trying to find, something similarly fresh to myself. And on the 15 minutes time frame, after a long analysis and breakdown of this entire area, I found this last one. Now, if you look carefully, right, to this chart, you've got, final push into a supply, dump money, buyer exhaustion, right, and then a trap, right, markets push price down back into a demand, then retail traders hop on in, right, markets meet up here, and then a big supply is created, markets drop, markets retest that supply, and then drop again, leaving another supply. So if you forget everything in the yellow, you will see that in this gray zone, right, there was a break of structure, but markets haven't really come to terms with that, right? So just like my EURUSD, my EURJPY, I'm waiting for a sell up here, which is conversely different from my EURJPY swing trade, where the supply that I'm really waiting for, right? If you go back to the 1 hour here on our swing trade war room charts, the suppliers were waiting for, right? This is the 9 a.m. session and all that kind of stuff. But the suppliers were really waiting for the H4 daily are so high up, right? We are still waiting for price to come back all the way up here. All right, so this is where price is right now. And I think we found some type of action somewhere in there, right? Basically, the 50-minute supply that I'm waiting for, right? Which would match swing high, swing low, right? So that's the game we're playing right now. So just be very mindful of the changings, right, of price. You can see there, I've just thrown you a Fibonacci there. So that's EURJPY. I do apologize. It's now 10 to 9. I have to go before they send 2 cars to my house looking for me. They've done that before, by the way. So it's EuroCAD. I don't know if there's anything to play with there. Right, okay, I'm scanning quickly. Let's look at pound USD. Wouldn't that be important with ATP? Let pound USD be our last chart. All right, there's pound USD. I say I haven't drawn all these lines, right? So let's quickly do a quick MTA on pound USD, and fundamentally because of just how much it's worth to us. And I think we've got a chart with the clean MTA on pound USD. Right, so this is pound USD. Pound USD has, phenomenally been, the swindler of the markets for a very long time. Playing on, very precarious ground. Literally happily using weak areas of value. All right, so we've been waiting for a push to the upside. I just want to clear all this. I told you guys that there was a massive ugly cluster here that I could not trade. I personally never trade. Area, yes, there was a bearish engulfing pattern. Yes, there was a gap to the downside. Yes, the gap was always going to be filled, and when it gets filled, it was going to go down. But also, yes, one of my rules is glass effect is important to observe. You will get stopped out without even knowing you are. By the time you realize it's game over, your account is gone. And so because of that, I like being safe around glass effect. I never take the risk, even though the trade idea here was simple, right? Simple because of the market gap. Right, but anyways, here's what we have. Let's start on the daily. On the daily, we had this area of value that looked extremely risky. Buyers went up. I told you guys there was a buyer's Fibonacci here. Let's delete it. It's worked, right? Price came back. The buyers came back into this fib. That area of value worked. This area of value, I believe, was going to get broken easily, within a matter of time, blah, 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 glass effect. So I refuse to take a sell trade here. Those of you who did, you took a cowboy trade. And maybe there's a good example that sometimes cowboy trades work, right? What did that other guy say in the group the other day? Your inner beast. Maybe this is what inner beast moves look like, right? I don't do that. I can't. I just can't. Like, my conscience would not allow me, right? So this area was multi spike, but because of sentiment, right, price kept pushing, down, which is perfectly fine. And now we have a situation where that buyer's Fibonacci area is taken out, right, and has been taken out by a new type of order block. Could this be the supply doing this, or was there enough sell pressure added here? You can see there's a wick. You can see there's market inefficiencies trying to fill this wick. I hate any type of pound sells where pound is right now, because already I want to sell up there already. And already a part of me feels like, what if this sell doesn't work? this one definitely will. So anything down here is already a sell low in the curve, right? Low in the curve. So I'm worried about that. So if I go H4, we have this situation here on H4, right? Where markets are playing mind games, right? Price rallied in, blah, 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 and acted out. And on this last leg of this H4 climb, right, one could argue all the way up the unmitigated area. This is how markets closed on Friday, opened on Monday. There's a gap to the downside, gap filled, you know, markets continue to push, etc. And then we finally get to the 1 hour. So we know for a fact that we're in a downtrend. That we know. What would you do in such a market, right? I mean, you could have taken a cowboy risk. I didn't, right? No, this was a very good cowboy risky trade. You had to wait for price to fill the gap. It has, right? And then markets went to the downside. Now, selling here for me is crazy. For me, it's crazy, but it might be a good move, right? Selling here is better crazy than selling down there, right? Selling here is a better version of crazy than selling down there. Granted, selling anyway here is an all-time high of crazy. Right now, let's see what FIB is doing. Are these PCP areas or are these strong areas? To me, there we go. Golden ratio. So I would rather take a risk and sell up there. Just like EURUSD, wait for all the buyers to come in, get some strong action to the contrary, short-term trade that goes against everything that I believe, because again, I'm waiting to sell all up there in those yellow zones. And now my beautiful partner is opening the office door to tell me about time. Is it time? Huh? All right, there we go. That's my final warning, ladies and gentlemen. Guys, I appreciate you. Sorry we had to rush through this, but I thought it'd be better to do it now in case my meetings run into about 2 p.m. Have a beautiful day, traders. Good luck. Sentiment is important, but also not trading and just waiting for those clear golden trades. Couldn't be better, right? Let's all watch ADP. I hope to kind of like cover it live, but if I don't, I'll comment on the public Telegram group. But watch the results, watch price move, go to your 50 minutes time frame, see where the explosion happened at 3:15, up or down, based on what you know about ADP, and then wait for price to come back there. It'll create, as long as it creates a module 1 imbalance, markets will react, come back, retest, you take that trade. Do not trade at 3:15, wait for price to come back to the imbalances it creates. Have a good day, everybody. I appreciate you. Yeah. Cheers. Goodbye. Please don't forget to like the video. If you're watching and it helps you, please like the videos and subscribe. Like 20% of you are actually not subscribed, but you do come to the channel. So I'd appreciate if you were to subscribe, like the video, share the video.